How millionaires avoid taxes. In this video, I'll share the advice that rich people pay their accountants for. We all deserve this information. The first advice is not so attractive because it's initially expensive, but moving to Dubai, Monaco, Cayman Islands, or the Bahamas as your main residence can be a smart choice because these places do not have income tax. Invest 90% of your money. Unless you always need thousands of dollars for shopping sprees or impulsive spending habits, you should always invest 90%, if not all, of your money. Remember, reinvested profit is not taxable. It's a good way to accumulate wealth with little tax to be paid. Deduct everything you can, from health insurance premiums, travel expenses, or furniture. Let the company buy it if you need those things to run your business. Besides relying on your accountant, become knowledgeable about some accounting principles such as those associated with depreciation. For instance, if your assets depreciate in an amount that is more than profits, then you'll pay less taxes for that year. Outsourcing is very unattractive right now. However, the rich do not do what people want, but rather what is smart. Companies like Facebook, Google, Apple set up companies in Ireland. They need to pay a licensing fee to the Ireland company that owns the intellectual property. Through this method, money is taken out of the US and they only pay 1% tax or less, with even more optimization. If you live in a low-income tax country, you can set up a local company there and invoice your US subsidiary for rendered services, thus minimizing the tax burden in the US. We love charities. That really help us, right? And the environment. If you enjoy giving, you can benefit from your good deed because money donated to a charity is not taxable. In addition, as the head of the charity group, you can use whatever asset or building you donated for your own use. Even these not-for-profit and thus non-taxable foundations have tax-deductible expenses. So how do we tell if someone is giving out of kindness or out of only a desire for the deductible benefit? Well, that's a whole nother conversation. If you enjoy putting a smile on people's faces, though, you can give a $15,000 gift and that is not taxable. But you might be wondering what this has to do with the rich. Well, when combined, the lifetime gift exemption is $11.7 million, as long as they are all under $15,000. We know that stock could end up being more valuable than money, so choose to get paid in equity if you have that option. Elon Musk became wealthy very quickly using this strategy and has avoided income tax since he gets paid under $23,000 in income per year. Yes, you heard that right. Under $23,000 per year. ProPublica reports that Musk, the second wealthiest human on Earth, told the government he owed no income tax in 2018. Another example is Jeff Bezos, the richest person on Earth, who also told the federal government he owed no income tax in recent years. Warren Buffett has long acknowledged this infamously by saying that he paid a lower tax rate than his secretary. A CNN report analyzes how this is possible, but we already know how. There are many reasons. First, U.S. tax law is focused on income, and much of the super wealth is tied up in company stock or investments that have real value but aren't taxable year to year. A piece of art you buy is an expense which can be deductible. If your income matches the price of the art, then there are no taxes to be paid. After some time, an appraiser can decide the painting is worth more, and instead of selling it for a profit, you donate it to a museum or art foundation, and this is still non-taxable. This is all legal. If you're still making the same income per year and decide to sell for a profit, you could buy another piece of art with the profits, and this still would not be taxed. So there are millionaires and then there are millionaires. The difference is that some millionaires can afford to buy a yacht but can't really afford the maintenance for one. For a long time, sales representatives had a hard time closing the deal on a yacht sale due to maintenance costs. Luckily for them, the US government now allows island hoppers to claim a yacht as a second home for better taxation rates, as long as it has cooking, bathroom, and bedroom facilities, of course. If you're worth more than $11.7 million, the IRS qualifies you as rich, and it's probably best to use a trust to avoid paying estate tax. If you're rich and you die, the estate tax can go up to 45% of the wealth you want to pass on to your children. However, if you put it in a trust, provided certain conditions are met, the assets no longer belong to you and thus are outside anyone's estate for inheritance purposes. Well, I'm sure many of us thought, hey, what if there's an emergency and the wealthy need money immediately? How do they do that? Well, since they have so many assets, they can simply walk into a bank and say, hey, I need money. Look at all these assets I have. The bank will then give them a loan, and this is not taxable because they'll have to pay back the money they owe. This is another way that the wealthy avoid paying taxes. What about Bitcoins? Well, the profits from Bitcoins can be taxed at 10%. This is still actually quite low. So hopefully with all the information provided in this video, you can prepare for good tax optimization. Thank you for watching. Please like and subscribe.